let's look at the Bitcoin chart, and as well, let's look at a bit of information about mining, but of course, algorithms to defend, protect, the blockchain, essentially blockchains in general, right? But let's first start with this particular chart. This is the Bitcoin chart, and this is a weekly time frame chart. And what I want to show is that I believe our what we would call some type of like bear market rally has come to an end. Okay, so if you look at previous cycles on a weekly time frame, you'll see large volume candles, pardon me, pushing price up. And then the second push might not necessarily be as aggressive. As you can see, the candles are essentially white and gray here, right? But the areas I want to look most at would be this type of area here, and then this type of area here, and of course the area here that we have right now. Okay, these are areas where there's a rally after some type of downtrend. There's an established downtrend, but still price wants to bounce up in this area here. There's a downtrend, but still price wants to bounce up. But you'll notice that there's not a lot of volume coming in to actually make this a real trend to the upside, as in a counter trend. Okay, this is something we may call a retracement. Price is moving down, price bounces up, that's a retracement. On the flip side, if price is moving up and price drops, that's also a retracement. It happens in both directions. So the charts are about to get a little complicated, I'll be honest with you, because I've got a lot of alerts here that I've kept for this past several weeks and such. For now, I'm going to leave them. Pardon me if it gets a little complicated. I'll do my best to show what I'm seeing. So at this point in time, we had our top here. Of course, that was in October. We had our M right here. This is probably the first real side of the M. I mean, it did push a bit higher. This was a really tricky play here because it did have a fake W, but you'll learn a little bit more once we look at the inside right side of this W. It's not very, it's clear that this was not a W. Once you start to really look on the daily, this is a 1 day time frame, that the inside right side of this was not a W. Okay, it's more like an M. So, but down here, if I get a little bit closer, you can see there's not a lot of volume here. These candles that are pushing price up here are mostly gray and white, not a lot of volume. That is one clear sign that we know, or we believe, that this particular asset is changing directions. Okay, now you see that I have these levels marked out here. These liquidity levels, this is where people's stop losses are, where they will lose money if price pushes up into this area. So naturally, the market maker is going to try to push price up into that area, but they're not going to do it in such an obvious way. They're going to dilly-dally. They're going to move the price up and move the price down and move the price up and move the price down, just to make you think it's, oh, there's an M, it's going to go down. Well, we knew this wasn't an M because the inside right side didn't have a lot of volume. So there's the outside of this one, let's say the outside left side, inside left side, inside right side, and outside right side. Okay, the inside right side here did not have enough. To me, it looked pretty convincing. I'll be clear, it did, because it had a good 3 large candles on the 4-hour time frame, which is what we're looking at now, which is great. But the thing is, for me personally, I felt there wasn't enough of a push out here or even here. The pushes came a little bit late, and there are also some EMAs that were not tagged, but we'll dive into that, let's say, at another time. For now, because I don't have the EMAs lined up on the chart to show this idea just yet. Typically, we want the center peak to touch one of the EMAs, depending on the time frame that you're on. And this one didn't touch. It kind of went sideways and then pushed up again. So that was a sign that we could potentially continue on, which we did. So at this point in time, to my view, the market has topped for now, and there's a higher likelihood. You can see this is a very messy chart, but this thing that I have outlined here, this is my current trade, where I entered a little late, I'll be very honest with you, because I was taking long trades, short trades. As you can see, I entered this trade here and I wrote it up here. This is just where I stopped, but the trade was opened until somewhere over here when I actually closed it somewhere around here, okay? Where I took the rest of the profits and actually fully closed the trade, because I realized this market looks like it's actually reversing now. And so quickly, if you look at these pink areas, you'll see there's liquidity here, and you'll see this pink area here was already totally taken out. So that means price came up here, grabbed all these orders, liquidated people, they lost money, and the market maker pushed the price up a little bit more. But we oftentimes look at the 50% level, and as you can see, the top of this pink box to the bottom of this pink rectangle, price spiked right to the middle, essentially very close to the center, and it didn't come back on the second try. So that's a good sign. Again, this is a 4-hour time frame, so this is several days. That's what we want. We want to see a shift in trend like that. So what I'm seeing now is the price of Bitcoin coming down to some levels significantly lower. It could take weeks and months for this to happen, but it's nothing's wrong with holding a trade all the way from here, and then we get a bounce, and then we get another drop, and then we get a bounce, and then we get another drop, and suddenly you're getting Bitcoin at 70,000 once again. Somewhere, anywhere, who knows, down here. I'm actually seeing Bitcoin drop significantly further. That's why I have this green short indicator showing that I'm anticipating price is going to come back down to this liquidity level down here, or even this zone that we call trapped traders. Those are people that are on leverage that have essentially thought that price was going to go lower, but it actually reversed. So they got trapped in this wick down here. And some of them may still have their positions open, but a lot of them may not. And these people that have their positions open are probably sweating and minus, except they're not necessarily taking profits, or sorry, they're not selling at a loss. So I feel right now what I see is the market has flipped bearish for now, and I'm anticipating downside probably from here. This is like a 10-to-1 trade, so risking $1 making $10 if the trade plays out to what I believe. And I'm totally fine with it not being 10. I'm fine with it being a 7 or 6 if price decides to stop here. But I'm feeling there's a higher likelihood that price is going even lower to shock people like crazy right now. When Bitcoin is going to go sideways for some time, price is going to kind of bounce up and down, and people might still think we're in a bullish time just because of some regulations, this thing called the Clarity Act. It's fine. It's something that allows institutions or people, investors, to know whether they're buying digital assets, cryptos, Bitcoin, let's say Ondo, AVAX, Near, World Liberty Finance, Mantle, so on. So they're looking at this bill being passed is going to let them know that they can invest in cryptos without essentially getting in trouble. Let's just keep it simple like that. When that type of thing happens, when there is regulation that becomes clear like that, it's not necessarily a move where it's like, oh, there's new regulation, and so suddenly price is going to start to go up. Actually, it's likely and usually there's new regulation which got people all excited because we've been talking about this new regulation all this time, and now it's kind of becoming a buy the rumor, sell the news type of event, okay? So we can take a look at some of these charts, and I'll show you how I got some of my levels, okay? So we can look at some of the levels here, and we can look at specific levels on the chart. I'm talking about how did I look at these levels? Why do I set these targets? It's because again, this chart is so messy right now, so pardon me, but I will clean it up and remove stuff, but it's painting a very beautiful picture to my view. It's kind of a mess, but I understand what I'm looking at. Anyway, so these levels, a lot of these levels are very specific levels on the chart. They are numbers. They're not arbitrary numbers. They're not opinionated or opinion-based numbers. They are exact numbers provided by the price. As you see, look at this. The high of the week touches the exact point where price was last week at its peak. Look at this. The low of the week same thing. The lowest price touched last week was down here. That's why we have the low of the week over here, okay? And so forth. The low of the day is the lowest price went yesterday. The high of the day is the highest price went yesterday. The initial high, the IHOD and ILOD are the lowest and the highest price has been today. And the US settlement price is essentially the price that, in this case, we're looking at the Bitcoin chart, that Bitcoin closed at on Friday. So at the end of the traditional trading day, even though digital assets are traded 24/7, stock market doesn't trade like that. So this is like the stock market price. At the end of the stock market trading day, this U.S. settlement is the price that Bitcoin was or whatever asset was at the end of the traditional trading time frame. Okay. And so that's where I get my very clear levels so that I don't just randomly say, oh, this level. Well, this is one way. Sorry. Let me make it clear, because this is not necessarily a liquidity level like these pink areas are. These levels are more like targets for entries of a trade, or targets for a reversal, or taking profits, or confluence. So, for example, the high of the day was this green number, 8197. Let's just say 8200. So that was about here. And what do you know? So we can see that this number is very significant. Anyway, this tool is a really useful one. Okay, let's quickly look at some ideas of mining, just very quickly. I'll show you some things. Of course, you can pause the screen and use this information to your benefit. But the two major proof of work algorithms that are used to secure the blockchain, or blockchains in general, would be this one, SHA-256. This is Bitcoin's original proof of work algorithm or consensus mechanism. It's how people come to an agreement that something is, in this case, factual or safe or true, let's just say. So secure hashing algorithm. Okay, there you go. I'll leave it there because, of course, there's a lot of information. You can definitely read it, and of course, ask your AI agents and so forth for more, or AI tools for more information. Of course, we can always talk about it, but there's no harm in doing a little research as well. Okay, and then there's also Script. Okay, now as you can see, one of the interesting things about Script is that it's an alternative to SHA-256, because what it does is it actually focuses more on memory instead of pure CPU power. So the goal is to reduce the advantages of ASICs. What are ASICs? Okay, ASICs are computers that are application-specific integrated circuits. That's just a fancy way of saying a device that's designed to do a very specific task that allows it to do it at low electrical usage or low power usage, more efficient speed. It's not a general purpose processor. It's designed specifically to do one thing. So it's ideally, essentially, once it's created, it can do this one thing faster than just a general purpose computer, but it also potentially and typically uses less energy to do that. Okay, it's not like you using your laptop trying to mine a Bitcoin block. It's probably just going to require more energy. Mind you, ASICs can use a lot of energy, but the computer that you're using is going to use more energy to do the same thing is the point, right? So these Script mining and SHA-256 miners are essentially, or this algorithm, pardon me, is the main way that proof of work blockchains are secured. All right, let's dive in a little bit more next time. Take care.